Stock of the day, I thought we'd take a look at CSR, delivering a 20% bump in full year earnings. Strong growth in building products, chalking the result up to strong operational execution and high demand. Company declared final dividend, 18 cents a share. Sees group earnings being supported by contracted property transactions over the next 3 years. So shares popping into the greens this morning, up almost 3% on a lacklustre day. Carl, what did you think of the update, the result, and CSR shares at these levels?
Yeah, look, it's very strong results. Look, building is booming at the moment, obviously, but it is, it's hard to get the stuff you require. And we did a few renovations not that long ago, and just the delays and the cost overruns, not from our side but from the builder side, just gives you an idea of some of the background environment in which they're operating. So I think it was a really commendable performance, all things considered. Look, CSR it's not about what they've done, it's all about what's going forward. Can that activity continue at the current pace? Can it improve to continue to grow earnings? Can it find those sort of operational synergies and savings along the way to keep those costs fairly muted, and then take advantage of the higher activity? And I'm going to go probably yes on most of those things. I think the little bit of a question mark now is that obviously once the RBA now has started lift off, is just getting a little bit more clarity on how fast and how high they'll go. Market's expecting 2.5% by Christmas. I'd be shocked if that were to occur, but then it's going to have a flow through obviously to your mortgage rates, your construction activity, house prices as well. So I would say risk reward is fairly balanced here on CSR. Our valuation is it's basically here. It's almost actually at it today. So I think fairly valued, risk rewards fairly balanced, and the chart is actually showing that. I think the chart is a great reflection of the fundamentals quite often, and it's sideways. I mean, if you draw a line across that chart from the start to the finish, it's almost exactly at the same point.
Yep.
One benefit for your longer term holders is your 6% or so fully franked dividend yield. Look, on that basis, if you are that longer term holder, you're a bit more of a yield play. I was going to say capital stability for a cyclical stock. Maybe not. I can see a reason to hold it. Otherwise, it's just not something that our more growth-oriented clients are going to be looking for.
Okay. Michael, CSR?
Carl makes a good point. The chart sort of reflects the fundamentals, and in many ways you look at things like revenue, you look at things like earnings, dividend per share. They're all very stable going throughout the years, so it's quite a mature business. And even despite these incredible building conditions that we've experienced, you can see the share price really hasn't done much, even though that's all played out. The company is in a decent position these days. There has been a lot of industry consolidation. They've reduced a lot of the debt off their balance sheet, so that the company is in a healthier position than it has been in the past. But going forward, given where we are in the interest rate cycle, I would be cautious going forward, because it's unlikely the conditions that have played out in the last couple of years will be replicated going forward. Today's result headline number was up, I think, 86% for net profit, but that was recognising some capital losses from previous years, so a lot of one-off items driving that. So do keep that in mind.
Right.
It's not a company that we get too excited about. It's a stable, mature company that pays a decent dividend, but I don't think over the long term you're going to get too much capital gains.
Okay. All right.